Did you lose money this week? What about the week before? Have you even made money this year? If you're not happy with your performance, then you need to watch the rest of this video. My name is Kevin Kleinman, head trader at Watchhimtrade.com, and over the next 10 minutes, you're going to hear real insight into why inexperienced traders lose their capital so quickly.
I want to address one thing. Somebody asked me about the first trade of the day I made on Tesla, why I didn't go in with more size. So my principal, I bought at 280 and I bought at 290. Just want to point this out. So my size was $570. My account size is right around 28,200. So when I put in that $570 principal, I had 2% of my account in that Tesla position. Now that's pretty normal, and that's kind of the discipline I want to practice, really. I don't want to be having much more than, unless I feel really good, much more than 5% at the most on a position, because yeah, that trade worked out, but what if it doesn't work out? I want my loss to be small. My gains, if I'm making gains more consistently than I'm making losers, then the money's going to take care of itself, because right now I put in 2% on a $28,200 account. That was $570. But say I keep doing well, get my account up to $30,000, that principal will now be up to $600. Now maybe 6 months down the line, I've done well. I've moved my account size up to $40,000, still doing 2% on a trade. Now I've got $800 exposure. It's really easy to look at these trades and look at how people do things and say, oh, why aren't they putting in more money? Because I'll put in more money when my money increases. But I'm trying to grow an account. So I can't, it's stupid to put in 10, 20% of my account, because then one loss sets me back. Yes, one win puts me ahead, but it comes down to, what do you feel better about? For me, you take two sides, right? On the one side, you feel happy when you go in big, and it works. On the other side, you feel shitty when you go in big, and it doesn't work. Okay, we've all been there, right? Tell me honestly, which was a better emotion? Did the happiness you felt from going in big and winning outweigh the discouragement, disappointment, whatever you want to call it, you felt from going in big and losing? Studies show that somebody who loses 20 bucks feels more upset than the person who makes 50 bucks feels happy. Don't ask me why. I'm just telling you, I read a lot of weird books, and they've done studies on that type of stuff. So for me, it's kind of about an emotion complex where I know what's going to piss me off, I know what's not going to piss me off. If I take a loss like I just did on Priceline, I took a 6% loss in at 330, out at 310, and I only had 300 bucks in the trade, so I had about a little more than 1% of my account in the trade. It doesn't affect me. It's just kind of move on. But if I go in that account, if I go in that position with 10%, okay, now I'm taking a $200 loss. Or no, yeah, I mean, it would be about nearly 10 contracts, so I'd be down 200 bucks. Now I've just lost almost 1% of my account on one trade. The goal is to increase your capital. That doesn't mean just by making winning trades. That's the obvious one. It also means by practicing intelligent risk management on losing trades. And the first step to managing a losing trade properly is managing your size properly. Do the math on your trades, guys. Look at your accounts. See how much principal you're putting in relative to your account. And then ask yourself, If I had a $200,000 account, would I be putting in that same amount of money? I guarantee you there's at least 5 of you that have accounts less than $5,000. You're probably putting in $2,000 a trade. Do you realize when you do that, you're putting in 40% of your account on one single trade, right? Think about it like this. We all want to manage 6-figure accounts. We all want to manage 7-figure accounts, right? I know we all do, because if we didn't, none of you would be here, myself included. So if that's the goal, ask yourself, when and if you're managing a 6-figure account, say you've got $100,000, are you going to put in $40,000 on one trade? Say you've got $1 million. Are you going to put in $400,000 on one trade? You're not. You're probably not even going to put in 20,000 of your 100,000. At least I wouldn't recommend it. So that's why I do that with my size, because this is a process. I'm not trying to make money today. I'm trying to make money for the rest of my life. All right. So, I don't care how much it looks, because I used to be the other way around. I used to care about making money today, and what happened there is I lost the most money I've ever lost in a period of 1 month. I lost probably 70 grand. So, I learned this the hard way, and it's the first thing I try and explain to new guys, that this thing's a process, and understand your emotions. Understand what's going to upset you. Understand what's going to excite you. I feel good about that Priceline trade I just made, because I legitimately thought it was going to get going. I saw Tesla moving. I saw QQQ starting to extend. So I'm like, all right, Priceline, I've liked the way it's held 1285. Let me step in here. You know what? I was wrong. It didn't get going, but I figured out a way to minimize the loss, and that to me was still a good trade. Now the better trade obviously would have been just going with Tesla or something, but that's not what I did. So I got to look at the trade I made, look at how I executed, and I'm happy about that. Really, on the weekend, go back and calculate your size. See what you're doing. See what you're putting into your trades. You might be cutting your account in half by only taking 10% losses, and you might be saying, man, I'm taking losses quickly, right? That's what I'm supposed to do. Yeah, that's true, but if you're taking a 10% loss on a position that's 10% of your account, now you've lost 1% of your account. And if you do that on 10 trades, now you've lost 10% of your account. And if it's even worse, you have 25% and you take a 10% loss, now you've lost 2.5% of your account. Right? You do that 10 times, all of a sudden, now you've lost 25% of your account value. Things can add up quick. And they always seem to add up quicker on the losing side than the winning side. So it's your job to stay focused on the goal. Don't get discouraged if the money isn't adding up the way you want it to be, because the only reason it's not adding up to the way you want it to be is because you're comparing it to someone else. You should be satisfied with your winning trades if you feel like you executed well. The dollar amount should have no value other than to outsiders who, at the end of the day, they don't want to see you do well. So just focus on yourself, focus on your management, do smart things. Everything we're doing now, without a ton of experience and not the largest accounts, these are the habits we're going to rely on if we're fortunate enough to grow big accounts. So if you make your money the wrong way, if you go all in and it works out, when you have 100K, you're going to be programmed to go all in again, and you're going to have one day where it doesn't work out, and you'll be right back where you started. So do it the right way. Build the good habits now. Your life will be easier later. Trust me.
When you watched that video, did you feel like I was describing you? Are you the person that's putting too much of your money into a trade? If that's you, then sign up to watch me trade. I'll show you how to kick the market's ass, not the other way around.